Shame, Premier, shame!
Furious Bayside residents make their feelings known.
Shame, Premier, shame!
Times are tough for investors trying to offload units and apartments here in Melbourne. 1 in 5 is now selling at a loss.
Here's what the Victorian government doesn't want you to know. Western Melbourne's property market is in freefall. Werribee, Wyndham Vale, Melton, Point Cook. These suburbs are now getting the lowest auction clearance rates in the entire city. Just 61.5% clearance in the west, compared to 72.5% in Melbourne's outer east.
January 2026, Melbourne. 8,000 brand new apartments sitting completely empty. Developers bleeding cash. Apartment prices down 25% in some suburbs. That's a $167,000 drop. And here's the stat that destroys the narrative. Between 2020 and 2024, developers built 45,000 apartments across Melbourne, but 8,000 of them still have zero buyers, zero tenants, just sitting there. Complete, finished, worthless. Premier Jacinta Allan introduced stamp duty cuts in October 2024 to save the housing market. She slashed stamp duty for off-the-plan apartments, promised it would fix everything. But by January 2026, Melbourne's apartment market was in freefall. 8,000 unsold apartments, construction at a 16-year low, and apartment owners trapped in negative equity, watching their investments sink below what they paid. First-time buyers still locked out, developers going broke, and the Premier's solution making things worse, not better. Allan's $55 million blunder, October 20th, 2024. Melbourne's housing crisis crushing families, apartment prices falling, construction collapsing, developers holding billions in unsold stock. Premier Jacinta Allan responded with the Duties Amendment Bill, stamp duty on off-the-plan apartments, units and townhouses. Anyone buying off the plan could claim the concession. No price caps, no restrictions. Buy a $620,000 apartment off the plan, your stamp duty drops from $32,000 to just $4,000. $28,000 saving. Allan called it a game changer. Property councils celebrated it. But Richard Temlett of Charter Keck Kramer warned it would backfire. The stamp duty cuts only apply to off-the-plan purchases, not completed stock. Developers holding finished apartments get zero help. By May 2025, Allan extended the scheme for another 12 months, $61 million more. While 8,000 completed apartments still couldn't find buyers, 8,000 empty towers across Melbourne. Charter Keck. Kramer confirmed 8,000 completed apartments sitting unsold. That's 17% of every unit built between 2020 and 2024. CBD has 1,622 unsold, Southbank 676, Footscray 597, Box Hill 504, South Yarra 161, Coburg 183, Brunswick 113. Here's the brutal math. Old unsold apartments are selling for $8,000 to $10,000 per square metre. New apartments need $12,500 to $15,000 per square metre just to break even. That's a $240,000 to $420,000 price difference for a typical 60 square metre 2-bedroom. Why buy new for $800,000 when completed stock sells for $550,000? You wouldn't. Construction collapsed. JLL reported only 771 apartments completed in the first half of 2025. At that pace, Melbourne will complete roughly 1,900 apartments for the full year, lowest level since 2008. Melbourne historically completes 3,600 apartments annually. Now it's at half that rate. Between 2015 and 2025, development costs surged 76%, but revenues only rose 41%. Build costs alone jumped 78%. The double-digit price massacre. Domain research shows double-digit price drops over 5 years. Chadstone units down 25.2% to $497,000. That's a $167,000 loss. Maidstone down 23.1%. West Melbourne down 21.6%. Malvern East down 19.6%. Toorak down 18.6%. Balwyn down 18.2%. Urban Property Australia's analysis shows inner city Melbourne apartments declined year on year through 2025. 2-bedroom apartments down 0.3%. 1-bedroom down 2%, 3-bedroom down 0.7%. Sarah's $55,000 wipeout. Sarah is 32, marketing professional, bought a 1-bedroom in Southbank in late 2021 for $550,000. Put down $55,000 she'd saved since university, borrowed $495,000 at 2.19% fixed. Repayments were $1,850 monthly on her $85,000 salary. 2025 arrived. Fixed rate expired. Now she's on 6.5% variable. Repayments hit $3,300 monthly. That's an extra $1,450 per month. And her apartment is now worth $495,000 to $520,000. She's in negative equity, owes $470,000 on an asset worth $500,000. Can't refinance, can't sell without losing everything. Trapped. Michael bought 3 apartments in South Melbourne in 2021 near the future metro station. By March 2025, all 3 revalued. Everyone came back 5% below purchase price. 3 negative equity properties. Emma, 34, single mother in Footscray, bought off the plan in 2022 for $580,000. By 2025, identical apartments selling for $480,000. She's $100,000 underwater. Can't take the loss. Trapped. $4.8 billion in developer losses. Developers stuck with $4.8 billion in unsold stock. 8,000 apartments at average $600,000 each. Capital they can't use. Debt they're servicing with no revenue. Every month, they bleed money on body corporate fees, council rates, interest payments. Rental yields in Melbourne apartments are 3 to 4%. Why buy CBD apartment with 3.7% yield when Perth offers 4.6%? Investors left. Demand collapsed. Why Allan's policy made it worse. Problem 1. Stamp duty cuts don't help 8,000 completed apartments already unsold. Those aren't off the plan. They're finished. Concession doesn't apply. Developers still stuck. Problem 2. Buyers incentivized to buy off-the-plan new developments rather than completed stock. This makes oversupply worse. Old stock becomes harder to sell. Opposition housing spokesman James Newbury. 8,000 completed apartments unsold while builders can't get new projects off the ground unless prices rise to unaffordable levels. That's a market failure, direct result of Labor's broken planning system and tax-obsessed approach. The policy doesn't help Sarah in negative equity, doesn't help developers holding $4.8 billion unsold, doesn't help first home buyers who can't afford new apartments even with discounts, doesn't help renters facing 1.8% vacancy rate. By May 2025, Allan doubled down, extended cuts another year, $61 million, but 8,000 apartments still unsold. The investor exodus nobody talks about. Between 2020 and 2024, Melbourne went on apartment building binge. Supply concentrated in South Bank, Docklands, CBD, Footscray, Box Hill. Theory was Melbourne's booming population would absorb supply. It didn't. Construction costs surged 40% since COVID. An apartment that cost $300,000 to build in 2019 now costs $420,000. But sale prices haven't gone up 40%. They've gone down. Investors fled. During COVID, international students collapsed. Overseas investors pulled out. Local investors sold because yields are terrible. Victorian government attacked investors with taxes to plug budget deficits. Land tax thresholds slashed. Vacant land taxes expanded. Regulations became strictest in the country. Result? Victoria lost 21,700 rental properties in one financial year. 21.7% of survey respondents sold at least one Melbourne property in the past year. 22,000 fewer rental properties available. Activity centres nobody asked for. While apartment market collapsed, Allan unveiled her plan. 60 new activity centres around stations, allow buildings up to 16 stories, build 300,000 high-rise apartments by 2051. She announced it in Brighton. Residents chanted shame. Local MP James Newbury held a sign. Bayside don't want 20-storey apartments, Jacinta. Plan included Armadale, Hawkesbury, Malvern, Toorak. But these activity centre suburbs already have dozens unsold. South Yarra 161, Coburg 183, Brunswick 113. How can developers build new when they can't sell existing stock? Victorian Liberals and Greens teamed up to launch inquiry into reforms. Together, they have power to revoke changes. Liberal David Davis predicted destruction of large parts of our Melbourne suburbs. By mid-2025, reforms under threat of being killed in Parliament, where this nightmare ends. Best case, 8,000 unsold apartments gradually absorbed over 3 to 4 years. Prices stabilise. Construction ramps back up slowly. Market finds equilibrium. Worst case, 8,000 trigger cascading collapse. Desperate developers slash prices 20 to 30% for cash flow. That sets new benchmarks. When apartments sell for 30% below what you paid, your apartment now worth 30% less. More panic, more selling, prices spiral. Realistic scenario somewhere between. Market continues declining through 2026, another 5 to 10% fall. Some developers take big losses. Some owners default. By late 2027, if rates have fallen, we hit floor, but recovery won't be quick. Melbourne apartments will underperform houses for 3 to 5 years, could remain stagnant until 2028 to 2030. Between 2008 and 2015, Melbourne apartments went through similar flat cycle while houses recovered quickly. History suggests long recovery ahead. The crisis Allan won't admit. 8,000 completed apartments sitting unsold. Developers stuck with $4.8 billion in stock they can't move. Prices falling double digits in multiple suburbs. Construction hit lowest levels since 2008. Charter Keck Kramer, JLL, Urban Property Australia, REIV, Domain all confirm the numbers. While Allan announces stamp duty concessions for off the plan, actual owners are trapped. Sarah bought in 2021 for $550,000, now worth $500,000 or less. Negative equity. Can't refinance, can't sell without losing life savings, paying $3,300 monthly on 6.5% for declining asset. Michael bought 3 in 2021, all revalued 5% below purchase. Emma bought in 2022 for $580,000, now $480,000. She's $100,000 underwater. Multiply these by thousands across Melbourne. Complete market failure. Too many finished apartments no one wants. Too few new ones being built. Government response misses the point. Allan's stamp duty cuts incentivize off-the-plan buying. That makes oversupply worse. First home buyers still can't afford to buy. Renters crushed by low vacancy and record rents. Median apartment rent hit $879 weekly in mid-2024. For someone earning $80,000 yearly, that's nearly 60% of take-home going to rent. Locked out of buying, crushed by rents. Government's response does nothing. Allan elevated housing to cabinet level. Passed planning reforms with 60 activity centres, extended stamp duty cuts until October 2026, declared victory. But crisis isn't fixed. It's accelerating because stamp duty cuts don't create housing. They incentivize wrong behaviour, drive buyers toward off the plan, leave completed stock unsold, kill developer cash flow, stop new construction, reduce supply, make affordability worse. For Sarah, Michael, Emma, and thousands like them, Allan's experiment destroyed their lives. When you ignore market economics for political headlines, people suffer. And in Melbourne, they're suffering now. This is how Premier Jacinta Allan's policies crashed Melbourne's apartment market, and why the people who trusted the government ended up paying the price.